When it comes to running a business, understanding how to deduct business expenses the right way can be a game changer for saving money and reducing your tax burden. If you're running a business, especially if you're nearing retirement or already enjoying that chapter, making sure you're claiming the right deductions is crucial. Stick around, and I'll show you the most important tips and strategies to maximize your deductions without putting yourself at risk with the IRS. The first thing to understand is that the IRS allows business owners to deduct expenses that are ordinary and necessary for running your business. This means anything you spend money on that's essential for your work, from office supplies to utilities, could be deductible. But here's the catch. You need to keep excellent records. Without clear documentation of how you spent the money, it's much harder to prove to the IRS that those expenses are legitimate. I get it. Bookkeeping can feel like a chore, but it's worth it in the long run. To make things easier, I recommend using software that automatically tracks your expenses, such as QuickBooks or Xero. This takes a huge burden off your shoulders and ensures you're on top of every transaction. Now let's talk about some specific types of expenses that are often overlooked. First up is your home office. If you're using part of your home exclusively for business purposes, you can claim a deduction for a percentage of your rent or mortgage, utilities, and even repairs. Be careful though. The space has to be used exclusively for business. It can't double as a guest room or anything like that. Next, meals and entertainment. You can deduct 50% of meals that are directly related to business activities. That means meals with clients or meals during travel for work. Just make sure to keep the receipts and note the purpose of the meeting. It's one of those deductions that's easy to miss, but with proper tracking, you can save more than you think. Now let's touch on travel. If you're traveling for business, you can deduct airfare, hotels, transportation, and meals. However, if your trip mixes business with personal vacation time, you can only deduct the business-related expenses. The IRS is very specific about this, so make sure to separate your personal and business expenses when you're on a trip. Another important area to focus on is retirement contributions. If you're self-employed or own a small business, you can contribute to a retirement account, such as a SEP IRA or solo 401k, and deduct those contributions from your taxes. These contributions don't just protect your future, they can also significantly lower your taxable income today. If you're serious about protecting your wealth, particularly as you approach or enjoy retirement, then I strongly recommend clicking the first link in the description below to learn why thousands of Americans are securing their wealth through gold IRAs. These retirement accounts are a fantastic hedge against inflation and a great addition to your wealth building strategy, especially if you've got $100K or more in your IRA or 401k. Moving on to another area, equipment and assets. If you buy something for your business that has a useful life of more than 1 year, like computers, vehicles, or furniture, you can deduct a portion of the cost each year through depreciation. It's important to know the specific depreciation rules that apply to the asset, as there are different methods, and sometimes you can even take a larger deduction in the first year. Lastly, don't forget about your employees and contractors. The wages you pay, along with any benefits you provide, can be deducted. If you're paying for health insurance for your employees, that's deductible. And if you're hiring contractors, be sure to file the appropriate forms to ensure those payments are documented properly. Now, here's a key takeaway. All of this, from tracking expenses to contributing to retirement accounts, ties into how you can build your wealth over time. That's right. Maximizing your deductions isn't just about saving money in the short term. It's about creating a strategy that works for your long-term financial goals. If you've got $100K or more in an IRA or 401k, or even 5M plus in savings, you need to be proactive with these strategies. The good news is, gold IRAs are one of the best ways to safeguard your savings while still taking advantage of tax deductions. So, if you haven't already, make sure to grab that free gold IRA guide in the description below. It's a smart move, especially as we see the economy changing. Thanks for sticking around. I hope you've got a clearer picture of how to deduct business expenses the right way. These tips can help you maximize savings while securing your wealth for the future. Be sure to subscribe for more in-depth guides and insights. And remember, for those with substantial savings or retirement accounts, there's never been a better time to explore gold IRAs.